What is going on, everybody? Welcome back to Phones and Drones. So if you guys can believe it, 2024 is fast approaching, and I wanted to make this video. It's going to be a little different than our other videos we do on the channel, but I want to give you guys some more information about the changes to the new federal tax credit for EV vehicles, and obviously this will be more centered around Tesla specifically. However, a lot of this guidance is given from the IRS holistically to give you a better understanding of who's eligible, what it's going to, and how it's changing. So, first things first, from 2023 and prior, everything was a tax credit, which means basically if you bought a car in January, we were having to wait a whole year to get that $7,500 credit if it was a new vehicle and an eligible one. That is not very, it doesn't insinuate quicker buying patterns for people that are looking to get an EV. You would have to wait, submit it on your taxes, obviously be eligible, and then see that tax deduction. It basically lowers your tax liability to give you that break on that vehicle you purchased. That was kind of okay. Again, it's better than nothing, but thanks to this clean energy bill, we now have a significant change to where it is now becoming a point of sale credit or a POS credit. And what that means is if you go buy a Tesla, and just for round numbers is $80,000, you will actually be able to get a point of sale credit instantly. If the dealership signs up for this program, you actually get to give your right to the credit to the dealership in exchange for that instant credit off the price of the vehicle. So for the $80,000 car we're using as an example, or a truck, because if you're interested in the Cybertruck, it is eligible for the all-wheel drive variant, you would only be paying actually $7,500 less. That is pretty awesome. So again, $72,500 is what you'll be paying out the door for the car. You would basically give the dealership the right to that credit, they file it, and it's out of your hands now, which is awesome. There are a ton of information in regards to this, and really stipulations, I should say. Income for single, income for married, joint filers, all of this. We'll touch on it all here in a second. Beyond that also, you do have a right to continue getting the tax credit if you want to file it yourself. You do not have to use the POS credit. I think a lot of people will be doing it. It's going to help a lot of people lower those payments on these vehicles, which was it was always the point of this credit, is to incentivize people to buy electric vehicles. Plug-in hybrids are still available as part of this, just with different guidance there as well. Every vehicle is going to be different, and the credit is based off of how much of the car, I should say, is made in the US. So the parts have to contribute to X amount to be eligible for the full $7,500 credit. Some are available for lower amounts, and used cars are actually available as well. Let's jump into NerdWallet and talk about all these features. So as you can see here on NerdWallet, they probably have one of the most well-written and well-rounded articles here to help with. As you can see, this is going to give you the changes and a whole breakdown of what was done prior to what it is going to. And as you can see in the first line of the paragraph here, as of 2023, people who buy a new electric vehicle may be eligible for a tax credit as high as $7,500, and used electric car buyers may qualify for up to $4,000 in tax breaks. The non-refundable credit can be claimed on tax returns filed in 2024. Now, luckily, in 2024, the IRS will expand across the tax benefit by allowing customers to choose between claiming a non-refundable credit on their tax returns to lower their tax liability, or transferring the credit to the dealership to lower the price of the car at the point of sale. That is exactly what we were talking about prior, and again, is a huge, huge improvement. So, first things first, and this is not an all-inclusive list. This is only as of December 1st. You will see some notable cars missing here, but here is a list, and you will be able to go to NerdWallet and see what's eligible here. An Audi Q5 55 TFSI E-Quattro has an MSRP limit of $80,000, which you'll see is the top of the line credit you will be able to buy a car for, is only available for $3750. BMW X5, $3750 again. Cadillac Lyriq again has the full credit. Chevy Blazer, etc., etc. Again, specifying for what we're looking at. Teslas right now, long range and performance are eligible for the $7,500, up to $55,000 in costs. The standard range at the moment, again, is $7,500. However, Model X, Model Y are all eligible the same way. Obviously, missing is a Model S. They are no longer eligible for the tax credit. It has been exhausted for them. And if we go to Tesla.com, which I'm going to do right now for you guys, they are advertising pretty obviously on the front that reductions are confirmed for 2024. They're, again, always wanting to push their last quarter for end of year pushes for 12/31 for the full credit, but this comes with significant changes for Tesla for next year. As you can see here, the adjusted gross income limitations are $300,000 for married couples filing jointly, $225,000 for heads of household, $150,000 for all other filers, and price caps. So the Model 3 is $55,000, Model X is $80,000, and Model Y is $80,000. Again, missing is the Model S and also the Cybertruck. However, we have good news for the latter. Now, obviously it all depends on your personal tax situations. As they say, and as we always repeat, this isn't financial advice or anything like that. Recommend speaking to a tax professional for guidance is always recommended here. The Model 3 standard range and long range is going to lose all their credits. As you can see here, it says the tax credits will end for the Model 3 rear wheel drive and Model 3 long range with less than a week to go by the time this video goes live, thanks to the new IRA guidance. Take that for what you want. It's unfortunate that that main popular model is losing it. However, the Model Y is the best-selling car, so that will still be available up until the $80,000 threshold. But yeah, changes are coming for that. So how will the tax credit works? So as it says here, and as we described, your income must fall beneath certain thresholds, and the vehicle you intend to purchase must also meet several IRS specifications, including price caps and manufacturing guidelines. One thing that isn't as common with these builds are used EVs. However, as long as you find an EV, a used EV that's less than $25,000, it will be eligible. The car model must be at least 2 years old. It has to weigh less than 14,000 pounds, which shouldn't be an issue. And the credit can be claimed only once every 3 years. Again, as you can see here, a big call out is the price cap. As of 2023, vans, SUVs, and pickup trucks must have an MSRP or manufacturer's suggested retail price of $80,000 or less to qualify. That's why you saw on that list on NerdWallet and even on Tesla's own site, the cap is $80,000. Any accessories you get or add-ons, including full self-driving and all that, to go above $80,000 will cause the vehicle not to be eligible for the credit. So keep that in mind. And again, we talked about this for new cars, tax filing statuses. Used cars are a little lower. So used car tax filing status is for single is $75,000, head of household is $112.50, married filing jointly is $150K, married filing separately is $75K. So yeah, here is also how the tax credit is calculated. So it says the new tax credit worth up to $7,500 is made up of battery and sourcing requirements, each adding up to half of the credit. If the car meets both requirements, it is eligible for the full credit. If it meets only one requirement, you get half, and that's where that $3,750 figure comes from. Per the IRS, the requirements below apply to vehicles that are delivered to the taxpayer on and after April 18th, 2023. This rule also applies to cars that were purchased early in the year, not delivered to or until April 18th or later. We're not going to specify too much on this just because we're mostly talking about 2023 tax year when we will be into 2024. One good call out here is leasing and the EV tax credit. Leasing is becoming more popular, especially as payments are growing for vehicle prices and interest rates are high. Leasing a vehicle, again, even a Tesla, we've done it personally, you are eligible for the credit. We were able to get the $7,500 a couple of years ago when we got our Model 3. And so if you're thinking about leasing, this is a potential for you guys to do to still be eligible for that tax credit. So before we jump into Tesla's other vehicles, let's jump right into it and talk about the Cybertruck here. And if you go to fueleconomy.gov, it has been updated and it's kind of hit and miss for when you're going to see what. Mobile shows something a little different than what the website does on a desktop browser. But if you go to this website, like I said, and you go into placed in service around the time that delivery started, so the end of 2023, and do a 2024 model and go to Tesla down here, I just want to show you that the Cybertruck all-wheel drive is currently listed, which is awesome to see. Again, though, keep in mind, $80,000 is the MSRP limit for that full $7,500. Now, the caveat to all this is Tesla currently is not making a Cybertruck for under $80,000. Yes, technically, they will be selling one at some point for $80,000, but thanks to the Foundation series that they're pushing out, the minimum price is $100,000 and the MSRP limit is only at $80,000. So even if you have an order in, it does show the vehicle at $80,000, but the accessories like we talked about prior will push this over that threshold and you will not be eligible, to our understanding, of getting any of the credit at all. So just keep that in mind. If you jump in and check out the other vehicles in their fleet, like we were saying, and we already talked about the Model S not being eligible, if you go to the Model 3 next, it gives you a total breakdown of what is available and what's going to be happening in a few days here. So obviously we already talked about the $7,500 is going to be going away for that. We don't need to really jump too much on the Model 3. The Model Y is what I think a lot of people are going to be focusing on and ordering. So if you were to actually go ahead and order a Model Y, here's what you're looking at. So purchase price, obviously not over savings. Every single one of their vehicles are actually eligible. Excuse me, I should say every trim of the Model Y is actually eligible. And as you can see here, purchase price and probable savings correlate to that $7,500 credit. So this is the one time you can actually truly gauge what is eligible with this probable savings. Obviously, it's inflated a little bit because it does include $3,600 for gas savings that are estimated, but yes, you can use any Model Y, so the least expensive one, if everything plays out correctly, is going to be eligible for a $7,500 point of sale credit, which will lower this vehicle down to a ridiculously less expensive price that I think is going to make it a lot more obtainable for a ton of people. Going in and buying a Model Y standard, basically rear wheel drive one for $36,500 it's going to help a lot and sell these vehicles very, very easily. Now, obviously, if you want to get the performance one and then start tweaking it out to paying for paint, you obviously are getting the Uber turbines. Let's add a hitch, get the white interior. You can see now we're up to, with the estimated savings for the federal tax credit, $45,390. If you want to include all your taxes and everything, you can see where we're at. Fully loaded, still under that threshold. If you guys decide to get a Model X, this is where it'll become a little tighter when you order because the vehicle is more expensive as it is. The Model X Plaid is obviously not going to be eligible. Only the dual motor at the base configuration is what will be eligible for the tax credit. As you can see up here, it does specify Model X dual motor vehicle qualify for a federal tax credit for eligible buyers in the full amount. Now, the moment you actually start customizing it, changing your wheels and all that, that is when it will become uneligible. The good thing is with the Model X, all color paints are included. So if you're hoping to get a different color than white, you can. However, bad news is you want to add the rims, $5,500 extra, you are now above the vehicle price ceiling. Then you start customizing your interior, seating layouts, steering controls and all that, autopilot. You will be totally out of the credit. So I know this wasn't all inclusive, but hopefully it gave you a quick rundown of what to expect, again, especially for Tesla vehicles. To quickly recap, the biggest change is that this is going from a tax credit that you had to file with your tax returns for the next year. You are now getting that as a point of sale credit to instantly reduce the price of a vehicle. Think about it as a coupon from the government for eligible dealerships that opted in for this. But if you still do prefer to lower your tax liability, you have that option as well to keep using it as a credit the next year. Let us know in the comments down below if you have any questions. Again, I hope we covered everything you need. I'm sure we missed something though. Let us know. We'll try to answer them down below, or if needed, we'll do a follow-up video for you guys. Thanks for watching. We'll catch you in the next one. Peace.